Hello, everybody. Now we will be speaking about the money. I have two friends on the stage, Marie and Seth, and we will be diving into the VC world shortly. Should we sit here?
Yeah. Is that good?
Yeah. I mean, just to maybe you'd introduce yourself with a kind of 2 words, what you're doing these days, and of course to the startups in this audience, how much money you're managing.
Okay. You're talking about the important stuff, right?
Of course. First, the important stuff, right?
Okay. So I'm Marie Ekeland. I'm currently just started my own venture fund based in Paris, and the first close is of 100 million euro, but hopefully we'll end up more around 150, early stage fund.
Okay. Great. My name's Seth. I'm part of the investment team at Excel in London. In London, we're managing a $500 million fund focused on Series A and B primarily, but we're also part of a larger platform, so we also have funds in the US and in India as well.
I'll probably hold it a bit closer. So.
Okay.
Yeah. I was a couple of days ago reading about Steve Blank and making the beautiful comment about all the VC firms are kind of living the Ponzi scheme and expecting the valuations to eternally go up and the crash is near. I mean, Steve, your company is slightly bigger and investing in slightly later stage. You probably have some good comments about how do you see the situation?
Yes. Is this still on? So I think I think his comments were, I think there are kind of 2 parts to it. One is around the kind of later stage pricing and how that has become somewhat decoupled from company fundamentals. And I think that, as we see, big public equity funds that have invested in startups start to write down their private equity investments, I think that's caused, a ripple effect through the later stage market to cause people to pull back on the amount of capital and the price at which they're willing to invest. So I think that in general, we're seeing less appetite for, higher price valuations, higher price rounds and bigger rounds. I guess the big exception being Uber raising $3.5 billion last week. But I guess in general, we're seeing that appetite kind of pull back. And I think that's kind of cascading, back through other rounds. I think, our sweet spot, as I mentioned, is Series A and B, and we're seeing prices of those rounds coming down as well. And I think the other part of his comment is kind of ensuring that you as an entrepreneur are on the same kind of wavelength with your investors in terms of liquidity. And I think that, that's one of the things that we encourage a lot when we're speaking with entrepreneurs in the investment process is, being aligned with their vision in terms of where we want to both take the company, because it is kind of a 5 to 10 year journey in some cases, and if you're not completely in lockstep, then it can get ugly. So.
I would just add that there's also a difference between what you can see in the US and Europe still, in terms of the amount of capital deployed per startup. So if you compare the amount of capital that is in average invested in a European startup versus a US startup, and compare the NVCA statistics with the EVCA statistics, and just bringing back to the same base, it's an 8.3 ratio. So there's also a lot more money deployed in US startups than in European startups as well.
How much has this, you said some of this effect is coming down from the kind of later stages also to the B and A round valuations, but is it more US focused, or are we seeing it globally?
Yeah, it's definitely global. I think the broader point is people are no longer kind of, I think the business model that it's really hard to finance right now is we'll grow to 100 million users and then try and figure out a business model. I think people are focusing a lot more now on fundamentals. So, are unit economics working, et cetera, et cetera? Is there a clear path to building a strong, commercial side of the business around, what otherwise would be just a compelling user base?
Do you think it's the kind of the trend to stay with us for a while, or is this a fundamental shift, or is it just, like we've seen in some of the latest maybe financial crisis, that something has changed for a year and then everything is back to the normal?
I think you really had that trend of looking for growth and just not talking about profitability in any case. The fact that that profitability was asked by public investors. We stopped asking it because public investor came to the private markets, basically. But then you can see that having only private markets, at some point you don't have that reality check. So this is why people are plugging their mindset back onto, at some point we need to be profitable, or investors need to see that if we stopped investing, we would be profitable. So that trend, I think, is really sustainable.
Is it good?
Yeah, I mean, at some point you need to earn money, so.
I think this is, we've seen many technology cycles, right? So I think we're now entering a period of conservatism, and I think if you take the last 18 months as a very bullish time, valuations were very inflated, we're kind of entering a period where people are being a little bit more cautious. But we actually just raised our fifth fund a couple months ago, or closed it a couple months ago, and we did some analysis in terms of at the various points of the cycle when we've backed our biggest outcomes, and it's actually in periods like now when we've been able to back some of our biggest winners. And I think that again comes to the point of you start to we always focus on fundamentals, but you kind of it's reminding yourself of that, but also kind of the price comes down, which is nice.
We're having at one point the conservatism, but from the other side, of course, there is like more money available than ever. We have massive rounds from the EQT just recently, and you raised a big round. And how does the two things kind of go together? Does it mean that you basically big funds are sitting longer on the money if they are more conservative, or what's the kind of the outcome of those two trends?
In Europe in general, you'll see that the sector in itself is expanding, so there's more companies. You also see something which is quite interesting, is that if you talk to, Cambridge Associates is a LP which is doing a lot of research, and you can see in their statistic and other LPs as well that for once the European venture capital performance was greater than the US. So you also have this momentum in that we were late behind a little bit in European startup ecosystem, but they're growing a lot more. And so that amount of capital coming to Europe is also very good to kind of compensate a little bit the equity gap we had with the US, but also to support the growth of the ecosystem in volume.
Yeah, I think you're also seeing funds kind of reach outside their sweet spot to a certain extent. So that could be geographically or in type of transaction. So we were talking about this earlier, but Insight just did their 4th European deal this year. That was announced this week. So I think that's, their primary focus is on the US, but they're reaching into Europe. We're also seeing, growth equity funds doing buyouts. So I think it's, people are sort of being flexible as competition increases.
Yeah, Union Square Ventures, for example, which is this New York-based fund, and they have 25% of their portfolio in Europe. So they're really starting to look at more and more deals in Europe.
Having Europe, they're kind of happy that we are worried that there's not enough money for the startups, and many of the European startups are running into the United States looking for the money. I mean, do you think there's still a major gap from the kind of when you look as a VC on the startup scene?
I frankly don't think there's a lack of capital. I think for the great companies, I don't think there's a lack of capital at all. So I think it's readily accessible from Europe and also from the US.
Yeah, so what you could see in certain countries is that the business angel layer not being strong enough. This is obviously what happens in France, for example. Like the first step of business angeling is not strong enough, so your pyramid is also depending on how many startups you have at the beginning, and then if you want to make it grow very high. So I would say you could argue that in the financing chain, depending on the country, there is some gaps, but in general, you now have pan-European funds that are addressing all the different hubs pretty well, and there's US funds coming in, so in general, you do have capital.
So basically, any startup heading to the US with a claim that the money is there, we should look worryingly at them if they couldn't find the money in Europe.
No, No, I think that there is capital available. I think you'd head to the U.S. for a lot of other reasons, but I think access to financing, actual dollars, is probably not the issue. I think quality investors might be a different question.
Looking more kind of closely to the Nordics and looking at the kind of the European statistics or the global statistics, we're seeing that Nordics are really have been the hotbed for the startups, and they're in any kind of comparison they're really kind of punching above the weight quite significantly. What's your take on the kind of Nordic scene these days?
So the Nordics as an ecosystem has always been great to excel. I think our first, if I'm not mistaken, I think our first Nordic investment was ClickTech, which is also our first $1 billion plus outcome. And we've continued to be involved and invest in the Nordic countries for over 10 years. So we continue to be really excited about the companies that are coming out of here. Primarily in Finland and Sweden are probably our two focus areas. And I think one thing about Helsinki, which is very impressive, is it's now firmly on the map as one of the gaming capitals of the world. Which for such a small population, as you said, they're punching way above their weight. And so I think we're here every 6 weeks because it is such an important ecosystem to us.
When we built Daphne, we asked ourselves what would be the right investment strategy to build a pan-European fund. Where should we be focusing on, etc. And something we really looked at was to say, we know how instrumental the PayPal mafia was to create Silicon Valley as an ecosystem, because having role models it's raising the ambition of everybody. It's also bringing talents to the next generation of startups, bringing business angel, bringing a new lot of entrepreneurs. And so we thought we should look at which are the European hubs, because it's not a question of country, it's a question of hubs. If you look in the United States, you have obviously Silicon Valley, but then there's New York, but the money is deployed in these ecosystems, right? And life science for Boston for life science. But then we looked at which are the cities or the hubs in Europe which have generated more than 2 unicorns. And if you look at that, there's only 7. And there's obviously London, Berlin, Paris, Stockholm, Helsinki, Copenhagen, and Amsterdam. So, if you look at that, you say, well, there's a maturity of the ecosystem because people have already grown these role models, these unicorns. They have international leaders. And so that's very interesting when you have a look at the ecosystem to see it that way.
Yeah, I totally agree. I think you're starting to see kind of repeat entrepreneurs recycle both talent and capital back into these ecosystems, which is such a healthy signal. So if you look at Spotify is a great example. Trade Doubler was the first success, then Spotify, and now we're starting to see a bunch of guys from the sort of second-tier management spin out and start their own companies, which is exactly good, strong signals of a healthy ecosystem.
7 towns. It's basically some of the Central Europe and Northern Europe. Is there anything happening in Southern Europe?
So nothing up to $1 billion, but you had Privalia, which was just sold to Vente Privée at 500 million euros. Moscow also is part of that troupe. But no, Southern Europe for the moment, there's a lot of dynamic, but it's still early stage. They don't have yet their champions, but hopefully that will come.
Yeah, no, I think that's probably right in terms of track record. We've made 4 investments in Spain in the last 12 months. So I think that's certainly a younger ecosystem, but with a lot of promise.
One thing you guys had was really to say we're a small market, and so we're going to go international very quickly. And the Swedish model is very impressive, even for in France, for example, you didn't have that. It's just Criteo was really the role model in building a true category leader at the international level, and that changed the mindset of the local entrepreneurs. So it's really a question of mindset, because the previous companies that were built, the previous generation of entrepreneurs, it was Wellvent Privé or Free, which is a local telecom operator, and it was national champions. You didn't have really the world leader in this category, which changed, and it's super important. And so having that right away is a very good sign of maturity, and this is maybe why the movement was faster. I don't know.
There's certainly some clear logic to it, but basically Spain and Italy, and they're just too large. I mean, if you have a large enough home market, you don't really need to start thinking globally to build a unicorn from this day one, right? Yeah. What else was I thinking about? The kind of the Nordics comparison to the rest of the Europe. I mean, one thing is that their ecosystem is somewhat matured. We have some of the first unicorns. We have some of the kind of the management spin-offs already from those big unicorns. What else kind of for you guys defines Nordics? I mean, why do you come here for again and again and again?
It's the food, primarily. And the weather, obviously. No, I think, I mean, I think there are few sort of, as I kind of alluded there, like gaming is certainly a very, I think, a kind of on a world scale, kind of top notch in the Nordics. I think like open source software is another sort of very strong kind of component to the sort of Nordic DNA. And so I think there are like these pockets of expertise that you can really tap into. That plus what Marie was saying earlier is that they think globally from the get-go, which I think you don't find in other parts of Europe. And I think that's largely because it's a small population, and so to be big, you actually have to think beyond the borders of your own country. I think the last thing, which is kind of a silly reason, but I think like the English is actually phenomenally good, and so because of that, they kind of America is kind of a very obvious target.
Super good at English. I don't get it.
Never give away their accents.
I think the language question is quite interesting. I recently met 3 Chinese startups who were doing something really interesting, and all of them thought they were speaking English. I could understand one of them. I mean, there were also the other 2 were doing something really, really interesting, but the first one had to translate it. Right. So it kind of makes things more complicated, clearly.
Yeah. That was my French accent. So the way we looked at it also when we thought about where should we and what should we invest in Europe, we try to think in what is really the digital economy, and we thought it's an economy of usage. So if you want to invest in a company that has natural advantages because it is born in Europe, what should we be looking at? And so we try to understand if there are DNA of European societies, and that compare it to, for example, the DNA of US society, and see if there's a pattern there, and mapping the very big European successes. And what we found that there's 3 pillars for European society. One is we think collective, can be seen in the quality of the infrastructure, in the fact that when we think education, healthcare, or insurance, we think globally for everybody, or that the sharing economy is maybe not born in Europe, but mostly used in Europe. If you look at the number of active users on Airbnb or whatever, it's really a very European spirit. So the first pillar would be the collective. Second pillar, the quality of life. We're looking for a greater balance between private and professional life, but that develops industries like tourism, like culture, like leisure, like food, and a greater sense around privacy. And the third one would be what we called inventiveness, to have the creative excellency like fashion, luxury, but also to tackle that engineering savoir-faire that we also have. And comparing that to the US, you see that in the US, there's a lot of startups that are the first engine, the motor, the pillar is more productivity, how you make people work better together, how you make people improve their performance within a company, how you take and access data to make better business decisions. So that would be a very big one. Second one would be more empowerment, how people put themselves in the social media, how they defend themselves, how they optimize their time. And third one would be entertainment, with Hollywood as an alma mater of a huge ecosystem of virtual reality, of big medias, etc. So we tried to look at, is there this European DNA? Because you don't want to invest, you want to invest in what we're good at, and that creates greater chance of building international champions and not just doing Me Too's and copycats of what's doing elsewhere.
But how strictly do you follow this? I mean, European VR guys, there's a bunch of them in the audience here also. Would you say no when you mention the VR? Or?
No, well, it's a framework, right? So whenever, it's all this is good investments you need to do. But it was interesting because you thought, are we really having like local usage or local markets that are in phase with what we're doing, or it was just a question of better understanding the usage?
I think it's particularly helpful when you're thinking about new models that haven't been seen before. So, like, I think a good example is sort of the kind of peer-to-peer networks that have been built in France, for example, like, with BlaBlaCar and Airbnb, kind of like knowing that the French in this example would be very open to that kind of new, model is something that is kind of very, very helpful. Are the French open to that model?
Interestingly, your mic dropped there. The food comments were really interesting. So you're coming to Finland for food. I think it was Silvio Berlusconi who years ago made that comment about the Finnish food. I think he made a very sarcastic comment. Yeah. But the food sector in general, I mean, we have a number of food startups here offering us lunch, and we've seen a lot of food deals also in Europe. They're kind of companies raising money. I'm usually looking at this like, what's so innovative? How can food be scalable? Have you guys invested in food?
So there's a lot of things going on around agriculture tech, for example, in France, which are more around how you use technology to produce better quality fruits or vegetables or whatever, just by either optimizing the transportation or being able to produce locally through like containers that you're measuring everything, so you're using big data to really have the best quality possible and limit pesticides or whatever. You have everything around drones, which are how you can really localize and optimize the harvesting of everything, etc. So we see a lot around agriculture. And then, of course, on the food sector, there's everything around delivery, which was very big in Europe, like Just Eat and Deliveroo, or...
Seriously, how can food delivery be scalable?
In what sense?
I mean, it can't be the kind of the innovative growth business. You have a cars, you can optimize the cars' routes to deliver the food to the clients, but where's the kind of the scalability?
So, I mean, fundamentally, it's a logistics business, right? So you're kind of, with Deliveroo, for example, you're providing restaurants that have never had delivery or their own delivery in-house with a delivery service. And that kind of, the way that you, I guess, differentiate yourself on that is by routing your delivery guys on the most efficient routes possible. I mean, the same thing for Uber, right? That's how they differentiate themselves, is by the logistics and kind of the information that they provide to their drivers. But it's not like a phenomenon for food. Food's just a great use case of that technology. I mean, food, just as a category, it's probably one of the largest commerce categories that is largely offline, right? So I think even if you're able to take a small percentage of that market, you can build a very big business.
But I mean, in general, you can't really eat the online food, right? It has to be offline.
Right, which is why.
That's true.
Yeah. Walking around here, what are the kind of the sectors or things are the most interesting to you guys?
So we've spent a lot of time looking at virtual reality in the last probably 6 to 12 months, and I think that, I guess it's part of the gaming DNA in Finland is, I think some of the best virtual reality teams are here, and so it's really interesting to hear the perspectives of market timing, which is I think everybody's big question, and also kind of like what types of content are, going to win first. So we're sort of, I think it's interesting to hear, where other people are thinking about finding value or investment value in the kind of, stack of VR.
Yeah, that was. I agree with with what you said. Basically, as Ben was saying, there's this gaming DNA which is super strong here, and that is really interesting, and that is developing to other sectors as well. Yeah.
The VR question is, of course, the market timing thing. I mean, everybody talks about in the technology industry, everybody talks about in the investment community, everybody talks in the startup community, but I haven't really seen any consumer traction or the interest really. The consumers, where are the consumers?
I think the product, everyone's waiting for the hardware, right? And so the hardware is just coming to market now, and it's extremely expensive, and so it only appeals to the folks that are willing to invest thousands of dollars in, a laptop and a headset. So I think everyone's kind of waiting for the technology, the hardware technology to compress to mobile, and once that happens, you'll appeal to a much broader audience. Meanwhile, the content guys are kind of trying to maintain flexibility because, from a platform perspective, because it's very unclear as to what is going to win on the hardware side and which ecosystem is going to win. So they kind of have to juggle a lot of balls at this point. So that's kind of how we're sort of waiting to see how this all shakes out.
How long do we have to wait? It kind of...
That's the billion-dollar question, I think. But I think at least 12 to 18 months away.
The putting together the VR and the gaming know-how, does this mean basically that Finland has some DNA to be the kind of VR gaming capital of the world?
I would make that argument. I think there's certainly a lot of. First of all, I think this talent can come from anywhere, but I think success breeds success, and sort of when you have people that have worked at Rovio and Supercell, et cetera, then they kind of bring that knowledge to their next sort of venture. That's what they know. They'll probably start a company in that same category. So I think, once they've seen that work to the point where we were discussing earlier, is I think that, ultimately kind of creates a very, strong expertise.
The gaming expertise in Finland, is it replicable? Because Rovio kind of died. Supercell has made 2 really successful games. The spin-offs have kind of raised money, but none of them has really made anything horribly major.
It's not a Finnish question. It's more general for the gaming industry in general, which is what is the relevant, sustainable model for. And if you look at the other production industries, like movies or whatever, they just need to see how they deal with that factor. But it's not a Finnish question. It's more linked to the industry, and so.
Totally into the industry wider, as you were kind of begging.
I think other companies are facing the same issues. So question is, do you think that once you did this great game, you kind of give everybody dividends, close down and start a new game or whatever? We'll see how that goes, but it's a production model. I don't know if...
But looking from the VC perspective at the industry, where in a way it's about kind of one-hit wonders. Isn't it?
Sorry?
One-hit wonders, isn't it?
Yeah,
you might have a fantastic team, fantastic people. You put money in I hope they make that one hit, but they might have, like Rovio had, they might have 50 misses before that one hit. It must be a difficult industry to invest in.
It is a difficult industry to invest in, yeah. It is. The understanding how you can, like, all the movie industry, for example, went to what basically Rovio did, a lot of derivative products around a game and building a brand. And if they manage to not only build a game, but a brand around it and make it live with different other products, that could be one of the answer that you have in just not building one game and one hit and that's it. But it's like movies, it's like books, it's like all these, and you need to build your portfolio of games, and it's very difficult because as an investor, the question is, will you be, it's like reading a book, will it be a success or not? Or so you have more as gaming because you have metrics. And as Ben was saying, there's a lot of things that you can rely on, how the people are engaged within the game, how long they're playing, on either on just one particular game or throughout the time. So it's easier because you do have some quantitative to add to your own feeling around the game. But then the other question of how you can replicate that on other games will still add that because people are getting used to games and want new things. So it's not about just replicating what worked in the past, it's about inventing the next thing.
I guess the one thing I'd add is just when we think about when you see platform shifts, so kind of gaming moving from Facebook, for example, to tablet, kind of creates some white space for a new winner, exactly. And say the same thing we're looking for, from mobile to VR is, a new, winner to emerge. And I think that is kind of those points of kind of change in the market is when you kind of have the rise of new winners.
And this is the time basically to place the bets, right? That's what you're doing here. In addition to gaming and the VR, what else been interesting?
Well, there's a lot of different companies that we saw during the different pitches. Now, seeing emerging trends, in general, what we see is that digital is going to more and more science. So opening up to, because all the just disintermediation already happened, so now it's a question of how can digital be of help in healthcare, how it can be of help in automotive, how in things that will add new, more science, more technology, more different types of fields of knowledge, which is very interesting. And that also means that we're going to more hardware. And that's also like a general trend, which is very interesting because then you have to build very different companies that what we have seen in the past 10 years, which is also something quite cool.
I think it's a good point to wrap up. Our time is pretty much up. We will pass the microphone on to the next speakers. Thank you.